Time for today's three-stock lunch. Today, we're looking at three calls in the software space, a sector that's trading around its lowest level since May 2020. Bernstein initiating Snowflake and market perform. The analyst says while it's been a darling in the industry, it risks melting if it doesn't gain significant revenue. JP Morgan, meantime, upgrading ServiceNow to a buy with a $460 price target, and Wells Fargo initiating Datadog with an overweight rating and a $120 price target, calling it a unicorn in the software space. Here to trade these names is Marianne Montaigne, the portfolio manager at Gradient Investments. Marianne, great to have you with us.
Thanks, Melissa.
You know, it's funny because we walked you through these names before, obviously, before we got to this point on TV, and we went through what is expensive and what is not expensive. Is there an absolute number in your mind for this sector? I mean, it's really a sector that has been hit so hard because of macro concerns and just, you know, a risk aversion in the market, particularly to companies that have high valuations that are not profitable. I'm not saying that these companies are not. Some of them are. But this sector has been just really taken to the woodshed.
Yeah, I think a more attractive company is going to sell below 10 times estimated 2023 sales. And part of the reason is because that managements have already alluded to the fact that they have longer sales cycles in this cloud software sector. And they've just been more cautious on their guidance. Now, when you've got valuations that are higher, you're going to get harder from rising interest rates and also the macroeconomic uncertainty. So, you know, one of the companies that we're talking about is Snowflake, which has a very high valuation. I call it rarefied air at 24 times sales estimated for 2023. And management has beaten expectations. They've raised guidance this last time around, but they indicated the growth is slowing. So longer term, they have some great plans, but shorter term, that valuation is just too high for us.
Let's move on to ServiceNow, whose valuation you find rather more attractive.
Right, Tyler. So the valuation is about 8.5 times next year's sales number. And, you know, we think that they're going to continue to grow sales and earnings in the 20% area. Despite the lengthening deal cycles, this one actually has a pipeline that's very strong, and they said that there's been a 40% increase in the pipeline following their Knowledge Now conference. That was management's comment. So this is a mission-critical type of software for IT workflow and also HR for larger enterprises. And they have a renewal rate of 99%. That's the company I want to be invested in. And they have about 5.5% share of their total addressable market. So we think there's great prospects ahead for ServiceNow.
It sounds, Marianne, like you might be sniffing around Datadog, but it's a little bit too expensive right now at current valuations.
Yeah, it's about 12 times that price to estimated 2023 sales. And management noted a gradual slowdown last quarter, primarily on their larger customers. And we'd just like to wait for a better buying point on that one.
All right. Marianne, great to speak with you. Thank you.
Thank you.
Marianne Montaigne.